Hi folks, Canadian Prepper here. This is not going to be a daily update video. This is just going to be me ranting about what I am doing with all of my disposable income right now. And I want this to be a warning to people because I believe we are one black swan event away from a run on the stores. From that point where people realize their money is being devalued in the bank. Any money that you have that is sitting idle, any cash that you have in your house is losing its value by the day. How can you retain the value of that? Well, basically you go and stock up on stuff. You get ahead of the curve before everybody else does and the prices get jacked. And I assure you price hikes are around the corner. Now, right now, the Fed is saying that they're going to continue to increase interest rates in an attempt to get a hold of inflation. If they cannot do that, if they are not successful, even if they are able to disinflate, we are not going down to, a steady sub 5% inflation for many, many years, I do believe. In fact, a lot of people think we are going much higher than that. And the true inflation rate, as we all know, is not really reflected in the CPI. So we're talking about, 10 to 30% of the value of our currency being devalued every single year. So that money in the bank that's just sitting there, not collecting enough interest to keep up with the inflation, you're losing money. So this is what I strongly encourage you to do before some other major event happens. I would encourage people, and I'm not a financial advisor. In fact, let me rephrase this. This is what I'm going to do. And I'm going to give you a reason why I'm not going into Bitcoin and I'm not going into the stock market. For starters, this is the Shiller PE ratio, price to earnings ratio. This basically assesses how overvalued the stock market is, okay? This is back in, I guess, the early 1900s. Okay, this was Black Tuesday. You see this big spike? That's when the market was way, way overvalued. All that money that got pumped in, people went crazy. And then, of course, there was the crash. And this was the dirty 30s, okay? Then we come here. I believe this is the 80s. This is the dot-com bubble here in the year 2000. That was the most overvalued the market's ever been. Then we crashed down 2008. And now we're back up here, much closer to the highs. Okay, we are higher. The market is more overvalued now than it was back in 1929 before the Great Depression. Think about that. We're at a Shiller PE ratio right now of 30. The mean is around 15. The low point is around 4. So there is much more downside risk than upside risk. And you tell me, in this current global macroeconomic environment with the wars and the shortages and all the climate stuff going on, do you really think there's a potential for this to go much higher? Now, we're also in the age of quantitative easing, right? So, I could be wrong, but eventually this has to come back down to the mean because this is just way too overvalued right now. And judging by the lack of resources, the high cost of energy, there's a very good chance that stock market is not going up anytime soon. Again, I could be wrong, but here's what I'm doing, guys, and here's what I would encourage you to do. Every single cent that I have right now that's disposable income I'm turning it into something material, okay? Whether it's energy, commodities, as many of you know, I run a store, CanadianPreparedness.com. I see the writing on the wall. The manufacturers are going to be raising their prices very, very soon. I would encourage people to stock up on the following items if possible. Obviously, survival preparedness supplies is one thing, but consider firewood. Now, especially if you're in Europe right now, where you got people in Poland lining up for coal to heat their homes this winter, having a cord of firewood, just in case, if anything, you could use it for, the fireplace. You could use it outside in the fire pit, if for nothing else. But just to have a cord of wood on hand, it's really not going to go bad for several years, okay? So you can use it, even if we get through this winter unscathed, it's not going to really diminish in its value. It's only going to increase in value, especially in the current marketplace. Non-perishable food items, okay? We're talking about rice, beans, Mylar bags, 5-gallon buckets, canned food. Most canned food, the expiration dates is just a suggestion. It's not required by law. So a lot of these canned foods are going to last much longer than is stated on the actual packaging itself. We've done an in-depth video on that before. Animal food, okay? If you have pets and you have money sitting in the bank, you may as well convert that money into animal food because you're going to have to buy that stuff at some point in the future anyways. So you might as well buy it now while it's cheap, while you still have some purchasing power in your dollar. Soils, fertilizers, any sort of gardening supplies, seeds, things of that nature, things that are going to keep and put your seeds in a cool, dry place in order to keep them. Like I say, soils, fertilizers, these things are only going to go up in price. These things will be good for a long, long time. So, you know, you want things that are not going to degrade, non-perishable items. Things like socks, underwear, things that you know you're going to buy 10 times a year. Why not buy enough socks and underwear for the next 10 years? And I'm dead serious about this, guys, because if there is a run on the stores, because people are going to come to the realization at some point that the value of their money is diminishing, and everybody is going to go and start buying stuff. This is the risk, right? This is why we want to be ahead of the curve. Things like toilet paper. They're already talking in many European countries that there's going to be a toilet paper shortage this winter because of the high cost of energy. Okay, different types of fuels like kerosene, propane. These types of fuels will last for a long time. Propane, I think, will last 10 plus years, perhaps indefinitely, if kept in a well-sealed. If anything, the tank itself and the gaskets are probably going to fail before the fuel itself. Kerosene, I believe, is somewhere around 5 years, and you can also get stabilizer for that. Diesel, around 2 years with stabilizers, you could extend it. Gasoline, 6 to 12 months with stabilizers, you could extend it. Some people might ask, well, should I pay off my debts? If the interest rates, or if the money is being devalued, then the debt that you have, you know, barring that the banks or your credit card company doesn't raise interest rates to try to keep up, then, you know, it might be good to just pay your debt, not pay your debts off entirely, and just keep paying the monthly installments. But again, I'm not a financial advisor. Don't take my advice on this. These are just recommendations for disposable income. Things like toiletries, okay? Toothpaste, soaps, any kind of detergents, hand sanitizers, things that you're going to use regularly around the house for personal hygiene, any kind of medical supply. Those things are going to continuously go up in price moving forward here. Any type of lithium battery bank or solar panel, the prices on those things, mark my words, are going to skyrocket soon as demand increases. The problem is a rare earth metal scarcity issue, as well as production issues in China, as well as just the high cost of energy that goes into making these things. So there is a saturation in the market right now with respect to these lithium generators. But if you can pick one up, I'm guessing, and this is just my educated guess, that those things are not going to get cheaper in price. They're only going to increase in price because the cost of manufacturing and extracting the lithium is not getting cheaper, at least not yet, especially as there's a mad scramble to put it into electronic vehicles. Anything, you know, that you could use around the homestead, like jars, you know, for canning, tools, you know, metal tools, good tools that are going to last a long time. And finally, if you have large amounts of disposable income, I do believe that gold and precious metals are going to be the last safe haven. And I'm going to tell you why. Nobody talks about this, okay? At least not most of the gold bugs I know, but they should be talking about it. There is approximately 250,000 tons of gold in the world. About 200,000 of that has been mined. Most of it is in jewelry. 50,000 remains in known reserves, okay? And the price of gold, just like oil, has to be high enough to make it lucrative to go and mine it. So the price of mining gold now is much higher than it was in the past. So the price of gold has to remain at elevated levels in order to justify companies going and spending all these money to extract it. So I don't know what it is exactly, if it's like $1,000 to get 1 ounce of gold, something to that effect, okay? And it's probably, the returns are hopefully a bit better than that. But they are projecting, at least with the known reserves right now at the current rate of extraction, gold is going to effectively run out or become way too expensive to mine by the year 2040. Now, by my watch, that's only 18, 17 years away, okay? So and this is, Goldman Sachs talking about this in 2012. Goldman Sachs analyst Eugene King took a stab at answering this question, estimating we only have 20 years of known mineral reserves of gold left, claiming that gold production would peak between 2022 and 2025 due to markedly lower grades and remote locations of the remaining known underdeveloped deposits. This supposed gold find, I can't remember which African country it was, that claims that they found $1 trillion in gold. There's a bit of debunking going on around that. And so, take that with a grain of salt. But they're thinking that we're in peak gold right now, meaning that the price is only going to go up. So we are likely to see, in my personal opinion, what they call a Misc moment, where this just tanks. Okay, this is what happened after 1929. This is where we are right now. Does that look familiar? And right now we have a hell of a lot more debt. Now there's some other stronger things in the economy right now. We have trillions of dollars of infrastructure that we've built out. We're not people have much higher GDPs, much higher standard of living than we did in 1929. However, due to the rising costs of energy on the whole, and don't think that energy is not going to increase in price in North America just because we have abundance of natural gas. With all of the pressures that are coming out of Europe with respect to the high demand for energy, they're going to be importing more stuff, which is going to raise the cost of things domestically here. If we continue to see a stock market crash and inflation stays at around 8 to 10%, and remember, that's just what we know. We all know that the actual inflation rate is that we're paying in the stores, or the actual price increases are much higher than what the CPI is saying. So I would strongly encourage people to consider what I'm doing right now. Don't do it because I told you to do it, but just I'm giving you ideas, okay? Because I do worry that money that you have in the bank is losing its purchasing power by the day, and the crazier and crazier things get out there, the less and less it's going to be worth. So would you rather spend your money now to get the things that you might need, or that you're going to need in the future, or would you rather wait a year when it's 10%, 20% more expensive? Okay, I've been warning people about price increases since late 2020. And since that time, the prices of the commodities at our store have skyrocketed. Okay, we're talking about anywhere between 10 to 50% on pretty much everything across the board. And the cost of shipping is still astronomical, even though the sea-based shipping costs have come down due to the gouging coming down because there's more supply, there's more shipping rigs to carry over the cartons. The price of diesel is still sky high, and that's going to continue to increase in the future. So I am very, very concerned right now. I'm very, very concerned that, we are on the precipice of a major, major commodity shock in the markets, and that we could very well see Black Friday, but for real. Black Friday for food, right around the time that the actual Black Friday rolls around. And it's always important to note that governments and even these macroeconomic talking heads are never going to give it to us straight, unless your name is Peter Schiff, that is, right? There's a few bears out there who are still, going to give us the real deal, give us the true insight into the markets. But yeah, I'm worried, guys. I'm very, very concerned right now. And this is something to think about every single day that goes by. That money in the bank is dwindling in its purchasing power. Now, you might think, well, the stock market's going to plummet and, I want to have cash on the sideline so I can throw it back into the markets. I'm not saying that's a bad idea, but as I said, we got a long way to go down. It's much more likely that we're going to go down than we're going to go up. And if that is the case, you might say to yourself, well, that means stocks are going to get cheaper. So if I'm holding cash, I'll be able to buy in at the bottom. Sure. How long is it going to take to get there? Nobody knows. But like I say, we are but one big event away from prices going through the roof. And Europe is not prepared. It's starting to sink in for people in Europe. You know, Germany is talking about how 85% of its reservoirs are full of natural gas. But the thing I've been saying all along for the past few months is that 85% of their reservoir, that's not what they use in a year. That's just their, that's just what they need if they're getting a constant supply of gas. That reservoir is just supplementary. Okay, it's like 20% of their gas needs. The other 80% comes direct through the pipeline on an ongoing basis. If that pipeline is not functioning properly, then that's 80% of their gas that they're not going to get. Industry is going to slow down to a crawl. And you may tell yourself, well, that means that there's going to be a big recession and nobody's going to have money to buy anything. And that means that the price of commodities may effectively actually come down. And there may be some truth to that. So, I'm trying to, keep an open mind about this, but my gut is telling me that those things that you need in order to survive, all those things that I just listed off, diapers is another one. You may not have children yet. You may be thinking of having children in the future. You may know some people who have some children. Just items for infants, toddlers, kids' clothing, various textiles that you're absolutely going to need. Get that stuff now. That's all I got for you today, folks. Stay prepped, stay ready, and stay ahead of the curve. Thanks for watching. Canadian Prepper out.